All right, welcome to Talk Tickers. This is where we break down the earnings calls that really move the needle. And today we're jumping right into Adobe's Q3 results for fiscal 25. Let's see what's going on.
So, Adobe dropped their numbers after the bell on September 11th. And right away, what did the market do? The stock popped about 3% in after hours. So, the big question is, why? Let's unpack it.
Okay, here's how we're going to break this down. We'll start with a quick earnings snapshot. Then we'll get into the real meat of it, the AI monetization story. After that, we'll look at their guidance and the vibe from management. We'll also tackle this weird disconnect between the results and the stock's performance. And finally, we'll wrap up with our take, the next call. All right, first up, let's get right into the Q3 snapshot and really the main takeaway here. A clean beat. Pretty simple. So take a look at this. They beat on both the top and bottom lines. Revenue came in at $5.99 billion, which was ahead of what Wall Street was looking for. And on earnings per share, the non-GAAP number, they hit $5.31. Again, better than expected. And you know, that revenue beat isn't just a fluke. It's really backed up by some serious strength in their core business. I'm talking about their digital media annualized recurring revenue. That's ARR for short. And that number just climbed to almost $18.6 billion. That is a massive, sticky revenue base. And all that strength, well, it flows right down to the cash register. They generated a record-breaking $2.2 billion in cash from operations just for the quarter. I mean, that's a huge sign that this company is running like a well-oiled machine. Okay, so the numbers look good, right? A solid beat. But that's not even the main event. The real story, the thing that's actually driving these results, is how Adobe is finally turning all that AI hype into actual dollars. And look, management didn't mince words on the earnings call. The CEO, Shantanu Narayen, came out and said it's a tectonic technology shift and the biggest opportunity for Adobe in decades. So they're not seeing AI as some scary competitor, they're seeing it as their next massive growth engine. And this is the key part. It's not just talk. They are putting up the numbers to prove it. Check this out. Their AI-influenced ARR, that's recurring revenue tied to AI features, has already blown past $5 billion. That's real money. And it gets better. You know those new AI-first products, like Firefly and the Acrobat AI assistant? Well, they had a target for the whole year of $250 million in ARR. They've already smoked that target. It just shows you how fast this is catching on. So what's the game plan here? It's actually pretty simple and smart. First, they're weaving AI right into the apps you already know and love, like Photoshop. Second, they're launching brand new tools built from the ground up for AI. And third, they're going after the big fish, the enterprise clients, with powerful automation stuff like Gen Studio. So, with this kind of performance and all this AI momentum, what does management do? Well, they get confident. And that confidence led them to raise their outlook for the rest of the year. Yep, they bumped up their full-year guidance for both revenue and earnings per share. And what that tells us as investors is that they see this momentum continuing right through the end of the year. That's a very bullish signal. And you could just hear the confidence in their voices on the call. They kept coming back to this one key idea. Their AI is commercially safe. Now, why does that matter? Because for big companies, for the enterprise customers, that's everything. They're worried about getting sued over IP rights, and Adobe is telling them, don't worry, you're safe with us. That's a huge differentiator. Okay, so everything we've talked about so far sounds great, right? Strong quarter, AI is working, guidance is up, but, and this is a big but, none of this seems to line up with how the stock has been acting for the past year. There's this massive disconnect we need to talk about. And this really brings us to the million-dollar question, doesn't it? If the business is doing this well, if the fundamentals are so solid, then why on earth has the stock been getting hammered? I mean, look at the contrast here. On one hand, you have a textbook beat and raise quarter, everything you want to see. But on the other hand, the stock is down big time over the last year. And it's all because of this story, this narrative in the market that AI is a huge threat to Adobe's business. And this chart just puts that pain into sharp perspective. Over the last year, Adobe is down more than 40%. 40%. Meanwhile, the rest of the software sector is up almost 25%, and the S&P 500 is up over 15%. I mean, it has been a brutal ride for Adobe shareholders. So, let's put all the pieces together. The good quarter, the bad stock performance, what does it all mean? Here's our call on Adobe from here.
Okay, so we are officially initiating coverage with an outperform rating. You've got the clean beat, you've got the raised guidance, and most importantly, you have real hard evidence that their AI strategy is working. For us, that all points to a bullish future.
So, our whole thesis is this: the narrative is shifting. The market has been stuck on AI as a risk, but these results are proving Adobe is actually an AI leader. You've got catalysts on the horizon, like their big Max conference on October 28th, not to mention just continued growth in that recurring revenue. So, the trade idea here is that long calls going into Max could be an interesting way to position for a potential re rating as the market finally starts to digest this AI monetization success story.
And of course, just a quick reminder, this is not financial advice.